Hello, good evening to you and a warm welcome to Prime Business with me, Pius Kojobaka. Minister for Energy and Green Transition, John Jinapor, warns of possible collapse of the energy sector if drastic measures are not taken now to save the situation. It follows revelations that the sector has been saddled with huge debts, threatening the operations of producers and distributors. But speaking at a high-level dialogue on the sidelines of the National Economic Dialogue, the sector minister noted that the development calls for some drastic action.
Briefing and the outstanding liabilities so far is about 80 billion. Wow. And it keeps increasing. 80 billion cedis. That's outstanding liabilities. And so today, if you were to put the energy sector back on its toes, you would have to cough up 80 billion to flush out the outstanding liabilities. Clearly, that's unsustainable. But even more worrying is the mounting liabilities. Assuming you were to deal with only 80 billion, then that wouldn't be the major problem. The major problem is that we have a total bill of about $175 million every month, especially with the power sector. The collection is less than 100 million. And so even going forward, if nothing is done, you're going to be incurring about $70 million every month as a shortfall or liability. And so that, for me, is a major issue. I take three things that I think we should be looking at. The first one has to do with ensuring that there's a high level of discipline and efficiency in the sector. In 2023, the PURC approved about $200 million as a cap in terms of capex for ECG. By the end of the year, they had incurred $700 million. So 500 million more than had been approved. What it means is that that 500 million was not factored in the tariff structure. And so the indiscipline alone is a major factor.
Now, Finance Minister Dr. Kasia Latu-Forson has given the firm assurance that the government will work on recommendations from the dialogue.
What I can say is most striking to me, particularly sitting there quietly, is the interconnectedness between the macro group to the private sector, to infrastructure, to all the other sectors, even to the governance and the corruption subsector, the need for us to do major reforms. And so the solution is there. We know the problems. We know what we have to do to resolve the problems. Let's start the implementation.
Wow.
And so I will wait for the communique. Then so together, I can use the communique as my Bible going into the preparation of the budget and to make recommendations to Cabinet for adoption and approval.
Wonderful.
For us to input in.
Thank you very much.
Let's stay a while longer at the National Dialogue because in a bid to tackle mounting economic challenges, the government is set to introduce a series of aggressive measures in the 2025 budget. This follows alarming revelations that the nation's economic crisis is more severe than initially anticipated, with several state-owned enterprises now burdened with sustainable or substantial debts. Now, Seth Tekpe, economic advisor to President Mahama, has weighed in on the significance of the National Economic Dialogue, defending its importance despite previous criticisms.
Now we've told the story about the challenge of the situation that we've inherited. What should be the way forward in getting everybody to the table? And some will say that just like self-government now, self-government later, let's move, get to work, and the correction happening.
You'll appreciate from both His Excellency and from the Minister, and his topic was quite clear, the state of the economy. And you will see that a substantial part of the SONA also dwelt on the state of the economy. He preferred some solutions, for example, the ability to get a TSA back and to make government liquid and be able to pay some debt as well as bringing down treasury bill rates, which hopefully will then affect the market rates and others. That is solution oriented. But you see, the history of it is in the treasury single account, where you look at government accounts in various banks carefully and not allow that same money to be used to buy your T-bills, right? So if you manage it well, then you are not going to the market to be oversubscribing, the T-bills. And that means that you are improving the demand situation, because government is demanding, it's on the demand side and others are on the supply side. So if government boosts its own reserves, then it means that, there's a bit of a squeeze on the, on the supply side. Okay, and he's demonstrated how that is the outcome. That is one example of what can be done. Now, I also like to draw your attention to the fact that the Treasury single account and the sinking fund, which were used in most of these examples, are not necessarily new. It's a matter of improving on their implementation.
Now, the Bank of Ghana is set to publish the votes of members of the Monetary Policy Committee on the policy rate review. It will also release reasons for their direction and view on the economy. The move is part of several measures to make their operations very open. Governor of the Bank of Ghana, Dr. Johnson Isiama, disclosed this on the sidelines of the National Economic Dialogue.
With the Monetary Policy Committee, you notice that up to now, you don't get to hear why individual members opted for whether the rate should stay the same or should be increased or lowered. You don't get to hear that. All that you hear is it is a unanimous decision. But in actual fact, there are divergent views, through those sessions. And so what we are going to be doing now is individual members' submissions will be published.
Wow.
And that is going to happen from this month.
Okay.
So you get to understand the basis for which actions were taken.
Wow.
And for me, that is at the core of what we do. We want the academia, we want the media, we want the private sector themselves to understand that we are in the same boat.
Okay.
Sometimes you need to increase the rates not because you don't want to see lower lending rates. You want to see lower lending rates, but where there is a risk, for example, to the exchange rate, where there is a risk in terms of your inflation path, then you have to, go on that tangent.
Away from the National Economic Dialogue, let's stay a while longer with the governor, because he has announced that the country could achieve its single-digit inflation target sooner than expected. This comes after the bank revised its inflation forecast, now projecting it could be reached by mid-2026 rather than the initial target of the first quarter. Now, in an interview with Bloomberg News, Dr. Isiama emphasized that the success of this revised timeline will rely on the current economic conditions remaining favorable.
From the last reading of inflation we have, it is still relatively high, but we think that the downward trend that we started seeing since last year or so is well on course. The last reading came in a little bit, higher. But we think that going forward, if you look at the causes, of the pressures, the inflationary pressures, it was mainly from, food inflation. It was mainly structural in nature. And so therefore, the coming budget statement, which is about to be presented on the 10th of March, should be presenting a number of measures that can contain food inflation. If that is done, we are sure that we will see a return to the disinflation path. We plan to hold the next monetary policy meeting next month, where we will reassess the conditions and take an appropriate decision. And therefore, once we have the appropriate monetary policy stance in place, and then also food price inflation is well controlled, we will begin to see inflation trending back to its target path.
While longer on the economy, because the Economist Intelligence Unit has warned Ghana must prioritize sustainable financing to avoid a debt trap. This, according to EIU, could lead to an activity that will require a delicate balance between different situations or requirements. My colleague Winston Taki has more.
The Economist Intelligence Unit, Africa Economic Outlook 2025, reports that the worst of the region's sovereign debt pressures appear to be over, but external debt servicing burdens remain high. This presents a critical challenge for Ghana, like many African countries, which must find alternative funding solutions to avoid excessive reliance on foreign loans. Ghana is one of the many African nations grappling with macroeconomic stability challenges, with nearly half of the continent countries still under the IMF programs in 2025. Fiscal discipline and sustainable financing have become even more critical. High external servicing costs continue to strain national budgets, making it imperative for Ghana to explore internal financing mechanisms. The EIU reports that Africa will be home to most of the world's fastest growing economies in 2025, with increased investment expected in sectors such as renewable energy, ICT, and logistics. This presents a significant opportunity for Ghana. The nation can strategically position itself to benefit from these trends while ensuring infrastructure investment aligned with national development priorities.
Absa Bank Ghana has launched a new banking suite in Kumasi aimed at supporting small and medium-sized enterprises in the region. The new suite is designed to provide SMEs with a comprehensive range of financial services and solutions tailored to their specific needs. Well, this is part of Absa Bank's strategy to support the growth and development of the SME sector. There is more in this report.
The launch of the new banking suite is part of Absa Bank's strategy to support the growth and development of small and medium-sized enterprises in Ghana. SMEs are a critical component of the country's economy, accounting for a significant proportion of businesses and employment opportunities. However, they often face challenges in accessing financial services and support, which can hinder their growth and development. Edward Nateboche is Managing Director of Absa Bank Ghana Limited.
Every SME that fails is a dream dashed. It is jobs lost. It is ambitions crushed. For us in Absa Bank, we believe that this is a sector that we must promote and champion. And it is quite clear that over the years, this is an area that we have done our very best to ensure that we bring onto the limelight. I can tell you about all of the things that we've done in this area. Part of the reasons why SMEs fail, obviously, is due to funding. On that score, over the last few years, we have given out 1.2 billion Ghana cedis to the SME space under our SME at 10 program.
The new banking suite in Kumasi offers a range of services and solutions designed to support SMEs, including business loans and cash management services. Audrey Abaka, Director of SME and Partnership at Absa Bank Ghana, highlighted the need for the initiative.
Have adequate space for any business customer who wants to come and interact with us and then get to understand the businesses and the solutions that we have on offer for our clients. And then also we have created a business lounge. That lounge is opened to any of our business clients who wants to come and use it for their business engagements with their partners. Your partner doesn't need to be an Absa customer. Once you book it, you have access to that lounge. You have free Wi-Fi. You can be there and do one or two business transactions, and it is for free. We have a bouquet of business solutions on offer in the center. When you come and you want a loan, when you come, you want digital solutions. When you come, you want trade transactions, forex transactions. You want cash management solutions. All of these solutions, our dedicated, trained bankers and RMs would be able to give you adequate information to make an informed decision.
For Joy News, Nana Boachidankwa Kumasi.
Chairman of the Chamber of Oil Marketing and LPG Companies, Gabriel Kumi, has warned government against any move to push local dealers aside in their quest to implement the cylinder recirculation model. According to him, the Ghanaian dealers have invested heavily into the industry and stand ready to support government policies aimed at improving gas supply across the country. Mr. Kumi advised government to widely engage in order to have a successful implementation of the model.
They haven't made any push on CRM. I think all the push that was done previous years, and you saw the reaction of our members. I mean, we had to come out very strongly to defend our investment and to defend the over 12,000 Ghanaians that we employ. We are yet to engage the new MPA political bosses to see what direction CRM must move. But it's obvious that the old approach has not worked and it's not going to work. We have always said that we cannot stop government from implementing its policies, but your policy must not come to destroy the investment of indigenous Ghanaians. Any attempt to push indigenous Ghanaians who have built the industry for over 30 years aside in the name of introducing a policy will be fiercely and fearlessly resisted. That one I must assure you. We are ready to cooperate. We are ready to engage. So at the end of the day, if we are called for any engagement on CRM, we'll be ready to go.
The West African Gas Pipeline Authority says it is committed to the gas pipeline treaty that will see the sub-region connected in the area of gas supply as part of ECOWAS energy policy. The gas pipeline treaty, signed in 2003 by 4 countries, has a vision to connect other member states. Here's more.
The 678 West African gas pipeline from Nigeria currently terminates in Ghana, but this is expected to be extended by the West African Gas Pipeline Company Limited, WAPCO, all the way to Senegal. However, a number of conditions would have to be met to make this possible after acceding to the existing treaty signed by Nigeria, Benin, Togo, and Ghana. These include demand and availability of gas, viability of the extension, tariffs, investment, among other factors. Jafari Kanya Hanawa is the Director General of West African Gas Pipeline Authority, WACPA.
The aim is to connect the sub-region. It's not just for it to stop at the 4 countries. But you know, before you can extend, there are some economic criteria they have to look at it. Somebody is going to put his money to construct. Are there customers that are ready to take gas? Is there gas available? Because it doesn't make sense for you to just extend and there is no gas to put in the pipeline. So it's a combination of many things. But for us as WACPA, because we do, part of our function, like we mentioned to you earlier, is facilitation. We facilitate, we represent, and we regulate. These are the 3.
Meanwhile, Chafari Kanya Hanawa revealed the authority has engaged Côte d'Ivoire on the gas pipeline project.
If you are advocating extension, you must also tell them how it will benefit them. So these are the things we always put on the table as we know it, as we see it done. We are not, WACPA is not out to just extend the pipeline. If it will not benefit you, we cannot sell, like they say in law, you cannot give what you don't have. So we have seen that for the countries that are gas off-takers on the WACP, we have seen the benefits for them. And we are saying, okay, why not? And again, a country like Côte d'Ivoire, they have gas. So it's also an opportunity for them to also sell their own gas on the pipeline. So we told them all this. It's for them to just go, sleep over it, look at the economic gain they will have.
WACPA maintains natural gas offers countries in West Africa cheaper source of energy for power production and its related benefits. Kwame Yankes reports for Joy Business.
Let's now talk cocoa, shall we? Gender inequality and policy enforcement gaps remain pressing concern in Ghana's cocoa sector. Now, speaking to Joy Business in Accra, St. Ghana's Program Officer Nana Kwesi Aka underscored the urgent need for a gender-responsive budget and stronger policy enforcement to bridge existing gaps in the cocoa value chain.
As preparations continue for the 2025 farming season in Ghana, several civil society organizations within the cocoa value chain are working to promote inclusive and ethical trade. Their efforts prioritize human rights, environmental protection, and women's economic empowerment. In an interview with Joy Business, the program officer of SEND Ghana and coordinator for the Ghana Civil Society Cocoa Platform, Nana Kwesi Aka, emphasized the importance of championing a gender-responsive budget across productive sectors of the economy.
In 2021, we did a gender audit of the Ministry of Food and Agric and also the Ministry of Fisheries and Aquaculture, just to see how gender is mainstreamed in their policies and programs, and also followed up to look at their policies and realized that gender has not properly been mainstreamed in their policies and programs. And also looking at the role that they play, especially in the agriculture sector, we made it a point to follow up to look at the decentralized structures, and we realized that the capacity gap was wide. So in an attempt, civil society and also SEND have been championing this capacity building needs to ensure that the stakeholders who implement our policies and programs are well versed with the needed knowledge to ensure gender responsive budgeting is mainstreamed in all our programs.
Mr. Aka also highlighted the need to bridge the capacity gap to ensure effective enforcement of policies within the cocoa sector.
The cocoa farmer is impoverished, looking at the changes in the global dynamics in terms of the pricing, and also looking at the challenges that the sector in itself is facing with the cocoa swollen shoot disease, smuggling, and also currently the spate of illegal small-scale mining where cocoa farms are being destroyed. And that creates extra headache for the cocoa farmer to deal with. Ghana, as a country, in the Commonwealth Ministry of Finance conference, committed to implement gender-responsive budgeting. And in 2009, they took shoot or started some initiatives. But some years down the line, we've not really seen it materialize. And it is something that SEND Ghana has been championing since 2021.
SEND Ghana remains committed to fostering an environment where stakeholders advocate for equal opportunities, challenge gender divisions, and address harmful gender norms and stereotypes in the cocoa industry.
Remember, you're still watching Joy News Prime with me, Pius Kojo, back at the business edition. Now, young entrepreneurs have been advised to exhibit high ethical standards and uphold good business practices to survive in the global marketplace. The advice was given at the 2024-2025 CFA Institute Research Challenge, where Team Magna from the Ashesi University emerged as champions. There's more in this report.
The CFA Institute Research Challenge is an annual global competition that connects university students with investment professionals from within the CFA Society network. The competition provides students with hands-on mentoring and intensive training in financial analysis and ethics, and tests participants' analytical, valuation, reporting, writing, and presentation skills. Samson Ansah is Vice President of the CFA Society Ghana.
The sense of the Research Challenge is to give students hands-on experience of what they've learned in school. So you have the opportunity to apply the knowledge as a equity research analyst. And just as you had the judges ask questions as if they were doing a sales pitch, selling an equity, whether they should do a buy, whether hold, or probably sell a particular stock. So that's basically the essence of the Research Challenge, is to unearth greatness, to give the students a platform to tell us and apply what they've learned in school. Fortunately, it's not just the Ghanaian stage they have. They will have the opportunity to move on to the sub-regional, compete with other African countries, and then move on to the regional, where they will have to compete with people from Europe and then Middle East.
In the competition, Team Magna from the Ashesi University emerged champions, followed by Wealthwise analysts also from the Ashesi University. The third position went to Star Research Advisory from the Kwame Nkrumah University of Science and Technology. Ernest Atiso is Chief Investment Officer at Cow Asset Management and is one of the judges. He outlines the criteria required to win.
For today's event, we are supposed to judge from the presentations. So for me, I looked at what the story is for each presentation, how they started with the companies, the understanding of the business of the company, the understanding of the numbers behind the company, and then how they assessed what kind of value the company would generate going forward. And then I also looked at some soft criteria like their confidence, the team work involved, and then how they understood or appeared on the stage generally.
The program was sponsored by Cow Asset Management Services and Access Pension Trust.
Thanks so much for watching Prime Business with me, Pius Kojo Baka. Grateful serving you. For more stories, do log on to myjoyonline.com/business. Grateful serving you.